Today, the authorities in Singapore announced new property cooling measures which would probably have an impact on banking stocks. The announcement comes hot on the heels of another recent YouTube video I produced on the Singapore government's determination to manage property prices. For Singapore citizens, the additional buyer stamp duty for their second property will increase from 17% to 20%. It will increase from 25% to 30% for their third and subsequent property. Singapore permanent residents will pay 25% additional buyer stamp duty for their second property and 35% for their third property. If we are looking to get an investment property, this will definitely impact affordability and we should see demand moderating. The authorities said that stronger cooling measures are needed because property prices showed renewed signs of acceleration in Q1 2023. This indicates greater speculative pressure. The fact that additional buyer stamp duty for foreigners doubled from 30% to 60% suggests that Singapore could be attracting too much hot money. Global money is trying to find a safe haven amidst too much turmoil in the world. This could destabilize the property market in Singapore with too much speculative pressure. During the last round of property cooling measure, borrowing limits for all property loans were tightened. A 15-month waiting period was also introduced for private property sellers before they could buy a resale HDB flat. Cooling measures do not hurt first-time buyers and are aimed at prioritizing owner-occupier demand. Today, UOB reported stellar Q1 2023 results today, and many analysts have bullish target prices averaging $33 a share, with a dividend yield of about 5%. UOB is a relatively attractive investment for income. At a price-to-earnings ratio of around 9 times, it is hardly expensive either. However, in the video I released earlier today, I said we don't want to throw caution to the wind. This is as net interest margin is expected to moderate with peaking interest rate in the USA plus very real recessionary concerns. Bearish sentiments could spill over and apart from stocks of property developers. We could see banking stocks in Singapore similarly impacted. When there is blood in the streets, that would be a good time to increase exposure. Now, with new property cooling measures announced, there is another reason to be cautious. For sure, I am not a seller. I will stay invested while waiting for a better buying opportunity. If we are not invested yet, we might get some. However, we don't want to put everything in at once. Warren Buffett famously said this. Many non-professional investors become concerned when stock prices fall. They think the market is telling them they made a mistake. Some may even be so shaken that they sell stocks at the lower prices. If we buy a stock because we think the company will be a long-term winner, we want to buy more at lower prices. We don't want to look to jump over 7-foot bars. We want to look around for 1-foot bars that we can step over. We don't have to do extraordinary things to have extraordinary results. If AK can do it, so can you.